Everyone is asking the same question. What is the Federal Reserve going to do for the rest of 2023 and more importantly, in 2024? Well, in less than 24 hours, we're going to get a bit of an idea about that. But could this be the most important chart for us to actually be watching? Hello, ladies and gentlemen, and welcome back to the Daily Show. We discuss stocks, commodities, and cryptos together. Today, we uncover one of the most important charts when it comes to inflation and the fight against it. We also need to talk about this huge rejection off a very key level for the S&P 500, and of course, what's going on with yields. They're pushing their upper boundaries. 5.1% was reached with the US 2-year in the last session. If this breaches, we're in the fear of the unknown. And that, of course, might bring us some opportunity and some incredible volatility. Well, welcome back, everyone, to the Daily Show where we discuss markets around the world. As we mentioned, there were some significant moves over the last 24 hours, but more importantly, it was all about that dump into rally. Could that be showing us that the market still has bullish intentions? Well, we'll be looking at some data very soon about the rest of September into October. And of course, we need to talk about bullish percent index to start off with today. Was it up or was it down? The answer was another day down, showing us that even if we do see a rally at this point, it could still be what we call a dead cat bounce or a false rally. We'll update this chart every single day until we see a bit of a turn. So I posted this over on X or of course Twitter, and I kind of talked about, could this be the most important chart to be watching right now? What it is it's the S&P 500 versus basically the commodities index. And we've seen a big change since 2021. Obviously, when inflation started to rear its ugly head, then we saw the S&P 500 underperform commodities. But all of a sudden, somewhere around about a month and a half ago, we reached a very pivotal point. We came back to this trend line. We've hit it now 1, 2, 3, even arguably a few more times. And then we rejected it. Once again, inflation was taking control. Oil is now pushing, of course, 92 a barrel. It just sold off in the last 24 hours, but it could go higher. And we've seen things like iron ore and copper having some recovery in recent months. So could this be the chart that we need to be watching? Well, we'll talk about that a little bit later on today's show. So let's now take a look at the data when we have a first half September weakness. So we actually ended up having that 2023 put in 1.27% to the downside. When we tend to see that, how many times in the last 50 years did we continue to go down? Well, it turns out that 7 and 17 is the stat. 7 up, 17 down. So a negative second half of September is statistically more likely. Have a look, though, at the last kind of 30 years worth of data. Only once in 2016 were we bullish over the next 2-week period. And of course, that's where we find ourselves right now in this market. We've already talked about post-OPEX week. Here's some other stats saying that this week should be negative. At this point, I guess it is, but it's not super negative yet. So, of course, the FOMC and more importantly, Jerome Powell's words will have a lot of weighting here. And we also know that the back of September does tend to be weak. Again, this is just data. What we're actually looking for is the reality. And the reality is going to be, what are the charts telling us? What is the price action? So let's now take a look at some of the unusual volumes going through over the last 24 hours, as we always like to do. No really significant dark pool activity, but of course, Amazon, we reported on this one the other day at the highs. Turns out they were sells. They pushed down to the trend line, and it's a pretty big point here. A lot of stocks hit some critical levels, including some massive FANG stocks or some massive Magnificent 7 stocks hitting into key demand zones over the last 24 hours. Will they be able to hold the onslaught of the Fed? Let's have a look at the options market. First up, I think it is important to note that we still have very weak options off the back of that massive $1 trillion expiration. The quad witching brought so many options with it that everyone has to have a bit of a relax into that point. Expect this to start spiking, though, over the next 24 hours. Almost 32 million versus 39.95 standard, 53% calls versus 47% puts. So still a lot of people loading the buy the dip type of scenario into, I guess you would say, a statistically unlikely event that should occur. And then we move over to the unusual volumes. Some more trade in Moderna as it was falling, but of course did actually manage to put in a green after that. And some significant trades through Enphase. This one was actually up 4.2%. Has it finally hit the bottom? Enphase has been dipping on dipping pretty much most of 2023. We will be watching that chart quite closely on the horizon. All right, well, let's take a look at yields and the charts as a whole. And first up, US 10-year. Take a look at this. New highs. In fact, it actually broke through in, I guess, anticipation of the Fed. Remember, Jerome Powell's speech might push the markets two ways. It's probably going to come out, go one way, and then opposite way afterwards. Often liquidity grabs are common around these events, and you may have seen these before. React, don't predict will be probably the key here. But if you were predicting, you would say, well, yields look like they're trying to break high. Yes, they are. 2-year as well, trying to break through. Got a 5.1% alert setting there again last 24 hours. But notice something else. All of those random prints from Monday, they're gone. Everything's gone. The Sunday evening in the US, the ones where we hit 5.3%, it's over. But just remember, if that does happen and we see a big spike up, that's the fear of the unknown. So that's where we're going to go into probably a market that's going to get volatile. It's probably going to make a new low. It's going to freak out. And in general, this is what tends to happen. You get that incredible volatility. Sometimes it can even go the opposite way to what you think, but follow the price action is going to be the key here, and have the patience to react and not necessarily predict initially. Have the key levels, play chess with the market, and recognize when your opportunity to strike is going to be there. Let's talk about the percentage of stocks above the 20. It's new low. So obviously that's weakening market. We also have percentage of stocks above the 50 moving average, almost forming a new low, and the 200 moving average almost forming a new low. Again, a key pivotal point to show us direction. Another one that was coming out here was the Dow Jones Transportation Average, often considered a bit of a canary when it comes to problems in markets. It was weaker, but it rallied similar to the rest of the market, and it allows us now to set some alerts above. So I'm going to do that one now with everybody here, and we're all going to do it together and put an alert in above there. Could this be, if we breach above here, a sign that we've actually found the dip? I think it could be. It'll move through a 20 moving average, which is obviously a significant moving average, and we've already seen it act as dynamic resistance, and it would be making a new high. So I do think the Dow Jones Transportation Average should be looked at on these charts. Another one that needs to be watched over the next coming weeks will be, of course, Home Builders ETF. We're coming down to these key levels. We know it's demand. We know that if Home Builders goes through, it again is a canary. It's a problem in these markets. Similar to what we see here when we talk about this chart, which is of course S&P 500 versus commodities. This is showing us that inflation is back, at least according to the market. The inflationary stocks that were doing so badly over the last decade are now suddenly doing much better. And that means the Fed most likely has more work to do. So it's showing you that higher for longer is the expectation. That's what the market's packing into price. But will it actually get that from Jerome Powell? Or is he going to say, oh, guys, don't worry about it, I'm going to cut next year? Who knows? I don't think he'll say that. I think he'll just say wishy-washy stuff, but he will be very, very careful with his words. The volatility of the volatility is still stagnant. No moves there. Skew dropped, but not much. So that just shows you that the bears and the bulls are kind of neutral into this event in that aspect. And we see here that iron ore has stopped going down. So again, iron ore broke through. We're all over that. Commodities increasing, but it has slowed a little bit as we started to see some reports of potentially peak demand coming out of China at this stage. What about magma? This is Microsoft, Apple, Google, Meta, and Amazon. Well, it was weakening, but it's just kind of floating around. Nothing much to report there. US dollar also very tough to read at these highs. Of course, you've got what you would call a coiling market with a real potential of a breach either up or down being very, very significant. If I had to guess, I guess I would go with it may have topped out, but we will find out over the next 24 hours. Trend is still up. I don't think it's got enough on it for either way. Let's move over to gold. Now, that did breach through and it's holding okay. So gold spot holding okay above this high. Again, it's very susceptible to the Fed. If we do see initial hikes and we see basically yields go through the roof, I do think gold may struggle there, but we may be in stagflation as well, which could be good for it long term. Gold stocks found the resistance, a little bit of a sell there. Again, waiting for the Fed, waiting for the event. US oil. Now, this one I'm not surprised at all at to see a sell coming through on it. There will be some profit takers, people that got in here and even on the lows. It's a clear target. And ahead of such a big event, why wouldn't you take some profit off? So somebody probably did do that in a big way. You can see the daily really rejected through here on oil. And I would expect it to kind of stabilize somewhere in around this zone here. So it depends what happens in the next 24 hours, but somewhere in the 87s, as the 20 moving average comes up into that demand zone, we're probably going to see stabilization. Again, above 95, that's going to be a huge breakout for oil. And then we can start talking about 100 plus a barrel But at this stage, we are at key resistance, and I'm not surprised to see selling there, as we talked about together. Tesla, not much going on here. The day was okay considering it started to open up poorly. You can see the long leg doji at the beginning. I kind of feel like it should go down to 250 and fill the gap in here. And then we'll find out whether the bulls can get control of it. But this will really be in the hands of the market itself. So the S&P 500 and the key levels coming up soon for that. AAPL, what's going on with Apple? No close above 180.50, so it's not really very bullish from that aspect. We know large trades have gone through here. We can probably assume they are buys because last time it was a buy, so that's probably a buy again. But yeah, no double bottom yet. Bears, you guys want 172. That happens. Well, down we go. And the markets are going to get thrashed, you would think. But Apple is very, very important. 20 moving average also sitting at 180.50. So a key level for the bulls. As we mentioned before, Amazon's been selling and it has sold off relatively well. Now it's moved into this trend line though. And we've seen that buy once, twice, 3 times, now 4 times at this stage. If we do manage to get underneath these lows here, which sits at around a price of 133, then we are probably seeing a bit of a swing turn. Again, I expect this to be a catalyst that comes off the FOMC should we choose to go short. And what you're going to also see is the pin bar that was put up for the S&P 500 most likely close below. And if that occurs, so it gets underneath this level and closes, it's going to get nasty. So Amazon, one that's kind of tipping, my favorite stock in the world, which is Microsoft, also looks kind of weak, to be real. It doesn't, it's not exactly a market I'm like, oh yeah, I love Microsoft at this price. I don't. I think it looks kind of bad on a chart. And it's not just that, a lot of stocks are starting to show some weakness. Even the best stock of this year, Nvidia, starting to really show that it's got some sickness or consolidation kind of trends going on in it. Speaking of sickness, no defense of the line here in CQQQ. So we really are waiting for policy out of China to try to support the economy. They've been trying hard. But will we make a new low? We've been discussing this for a while. This is obviously not a trade necessarily level. It's more of an investment kind of philosophy zone. A lot of big people have been jumping into China a little bit earlier. I think down here is a very interesting zone. And we do expect, of course, October to be the big month for China with the policy meetings coming through. So I'll be watching very closely. We've got some levels marked. We do think there's some type of defense here from policy. We'll find out whether we get something in the next couple of days. German 40 looks bad, obviously down near the lows. I've spoken about this at great length. Watch our last previous video if you're interested. Here we've got the flag on regional banks, which is kind of pointing towards further weakness in regionals and then movement down into the $40. That's where I expect buyers to come in if they do. And what that really is showing is maybe yields will spike up. Banks will initially sell $40 somewhere around here for KRE, and then we find out whether the bulls are going to trap and then start pushing for a big, big pull up. But yeah, little flag there, interesting times. ASX 200 sitting in demand. I don't like this chart at all. I think it looks ugly now. If I was shorting, I'd TP. If I was longing, I probably wouldn't buy it yet. I just don't think it gives us anything. US 2000, big weakness in the small stocks. This is bad. 1826 breach. I mean, yeah, okay, we're back down here in the 1820 zone, but wow. Starting to look really bad here on a chart. You can see the long leg doji, the market's underneath. It's going to take a very bullish market, a very bullish turnaround in futures and just general trade into the FOMC to really pull this one around. It looks really bad. And when you've got the small caps doing this, it again is a canary showing you that Dow Jones Transportation Average, home builders, so many things look like they're about to break, but they're all on those critical levels ahead of these announcements. This one actually is already technically breaking down. NASDAQ, now this is where things get a little bit better for the bulls, and there are some bull cases here. Big rejection here off the 61.8 fib. We also see it hold those lows. Now, of course, it's trading a little bit lower here in the futures, but let's just dial in small time frame. You can see it's come back up. So we had a suspicion there were sellers here and that people would get trapped into a long in this area. They probably did. Unfortunate, if that was you, then you got wiped, obviously. Well, maybe you didn't because you held it up. But this is an important area. This we know is supply, the whole thing, because it broke down. At the moment, we're testing that and we're finding sellers. But what happens if we breach through the 15,280 level? I think that's when we put the squeeze on these markets. So squeezing could be real if that does occur. For sellers, you guys just want new low. Close underneath 15,066, back down to the lows we go, and we'll use the S&P 500 to show that. There's the bullish hammer. There's that wipe of that key level, which is 43.30, which we've spoken about. We come back up. We've got a 44.66, but realistically it's 44.70 on the futures. We're looking for that level to be taken as a high. Squeeze time city, I think, if it does get above there. And then underneath from a technical level, back down we go to 43.30. Some really good zones starting to open up here on the charts, at least from the statistical probabilities. When we move over, we can see why someone's trying to sell there. I mean, clearly they're looking at this as a supply level and structural zone. But if we breach above, well, pullback should be met by bull demand. So yeah, again, I think it's a really interesting 24 hours here and super exciting to be watching the market at this stage. Closures underneath the previous low, I do not think bode well for the market. But what do you think in the comments down below? Let us know, let the community know, and then some people can read different opinions. It's always good to understand where people are coming at. Give some explanations as well. It does help out. Bitcoin, what's going on? It just keeps hitting the same zone. So 27,400 was a level that we believed it would start with. 27.9 is still topping off here. I don't know. It's still in the upward trend that we talked about. Hasn't made a new lower low, so therefore it still could be driving towards the 27.9, 28K. We kind of talked about that here and here as being bullish all of a sudden, and we are bullish into this level, and then I've got question mark for the next move. So again, it's just like anything. You've got a kind of bit of an edge for a little while, then you, of course, you sometimes do lose the edge and you go from there. Now, what is everyone talking about? Well, the CAD CPI came in pretty hot. So do remember we're seeing inflation kind of going up across the world. Most of this is due to, I think, easily what we all know, which is energy. But underlying, there are some other problems. Now we go to the Fed's fund rate. Now, everyone's saying, Tom, do you think it's going to go up? I would say no. I think it's going to be 5.5%. The real question is then in the statement, or more importantly, the press conference, 2:30 p.m. New York time, what does Jerome Powell say? Does he hint to a hike later on this year? Does he just flat out say we're going to do one? Does he say, oh, we're going to just use the data and we'll see how it goes and we're kind of happy, the boring stuff? Who knows? We're all guessing, but the market will react to his words. So do expect quite a lot of movement around 2:30 p.m. at New York time. As always, guys, if you enjoyed today's video, make sure to subscribe, smash that like button, and do help out the channel that way. Now, just a bit of an announcement. Of course, we will be doing our Vegas conference on the weekend. Looking forward to meeting many of you out there. But at the same time, if you're interested, you can get those virtual tickets over on fxevolution.com. And also, there will be some breaks in our YouTube, obviously, summaries and stuff. So I hope that we see you in only a few days. If there's something absolutely crazy, I'll try my best, but I will be on pretty long plane flights. So I'll do my best to get it done. We will hopefully resume as much as we can while I'm in America for the next couple of weeks. And thank you very much, as always, for supporting the channel, for sharing your stuff in our Discord community, and of course, for just being overall awesome. See you very soon, and bye for now.